DCB's numbers not looking good on face of it. Net profit of only 37 crores versus 44.6 crores. So it's actually fallen year on year. The only estimate we had was from Kotak, where it was expected to go up to 49 crores. So net profit has fallen to 37 crore versus 44.6 crore. Keep in mind, DCB is a bank which has been on a path of recovery. Gross NPA 1.99% versus 1.96% quarter on quarter. So it's gone up a bit as in terms of the gross NPAs, but not by much really. The net NPA has actually come down to 1.16% from 1.22%. Anything else that you can spot, Sonia?
Oh yes, the amount of gross non-performing assets, the absolute value has gone up, Anuj. So it's gone up to about 22,433 lakhs. So that's about 224 crores. Versus about 168 crores same time last year. So the gross non-performing asset value has gone up. Even the net NPA value has gone up to about 130 crores versus 94 crores. So there is a bit of worsening of the asset quality for DCB, and the profitability has also fallen for the bank. So the Q2 numbers are definitely below what the street was estimating, and most internals are on the downside. The NII growth has not been too much, but yes, there is a growth that the bank is seeing. So 150 crores is the NII versus about 117 crores same time last year. So that would be a growth of about 28% that you're seeing as far as NII is concerned. But the problem with DCB Bank has been, even last quarter they had subpar numbers. Last quarter, in fact, the numbers were quite muted. On the top line, they saw growth of just about 1%. The profits were up just about 5-odd%. And this quarter, the profits have actually fallen both year on year and on a quarter on quarter basis. Remember, they have been seeing minor worsening of asset quality quarter after quarter. So in Q4, the asset quality was about 1.76%. In Q1, it is 1.96%. And in Q2, it's 1.99%. So slowly and steadily, the asset quality for DCB Bank has been worsening. And that's something that the street does not like at all. Just to give you some more numbers, the provisions for the bank have gone up. So the provisions come in at about 22 odd crores versus 18 crores on a sequential basis, and versus about 13.7 crores on a year-on-year basis. So provisions for the bank have gone up as well. Meripon, you want to make one comment on DCB? Because even last quarter there was a disappointment, and this is the second consecutive quarter that the bank has disappointed.
I think one of the better managed banks. Number one. Number two is, when you were reading out the results, I was just noting on the numbers, and I personally feel that the disappointment, if any, could be in terms of the quality of assets, which you rightly pointed out is deteriorating, but not too much, if you ask me honestly, in the situation in which the banks have been performing. The problem with DCB stock, which you always liked, has over the last few quarters, has been the valuation. So I personally feel the stock, if it gives an opportunity, if it corrects a little bit because of the numbers which have come slightly below expectations, I think could provide a decent entry point all over again. I don't have too much of reservation on the numbers. Only thing is that the stock was expensive, and the stock could correct a little bit from here because of what has come, especially in terms of the quality of assets. So maybe around 125, 127 would be an entry point again for people who have never been able to buy this bank. It's one of the better performing banks, better managed banks, and maybe at 120, 125, 127 the stock could give a fresh entry point.
Okay, by the way, the net interest income is not too bad actually. It's 150 crores. So it does look like there's this extra provisioning which has clearly resulted in this net profit dent, because even the asset quality has not really been too bad. So I won't be surprised to see a bit of a reversal from here. But let's go across to Ekta to check some more details on DCB Bank. Ekta?
Well, prima facie, what I can tell you, Anuj, is like you mentioned, we've actually just seen the profit fall this time round. One, because of the provisions which are higher on a year-on-year basis, as well as the tax outflow, which in fact is higher on a year-on-year basis. I managed to glance at the P&L, and that's what I picked up. So if you really look at the other parameters, such as the NII figure, it's very close to what Kotak was estimating. It's an over 25% growth that they've recorded this time round, and that's coming at around 150 odd crores. So besides that, if it wasn't for the higher provisions year on year and the higher tax outflow year on year, then I think the numbers on the bottom line would have looked better. In terms of the gross NPA has been maintained this time on an absolute basis. I think it's just about a movement of around 3 basis points, so that's nothing to really write home about. They've managed to maintain it just at that level of around 2-odd%. So not much of a movement which is coming in on the gross NPLs. Overall, remember that DCB has been one of the outperformers if you compare it to the likes of the Bank Nifty on an overall basis. That stock has given returns of 5 to 6% year to date, and compare this to the Bank Nifty, which has underperformed, and you can see maybe there is some amount of profit booking which is just coming in post the numbers, mainly because of the higher provisions as well as the tax outflow. Otherwise, based on what I've seen, the numbers are largely okay.
All right, there's some more disappointing internals that are coming through. The capital adequacy ratio has fallen to 13.6% versus 14.27% on a quarter-on-quarter basis. So that's an additional negative. The tax expense has risen quite a bit to 19 crores versus 5 crores on a year-on-year basis. So all in all, these are disappointing numbers. The profits have fallen 10%. The asset quality has worsened. The provisions have gone up. And some of the other internals like capital adequacy has also fallen. So second consecutive quarter for disappointment from DCB. And that's the reason the stock is correcting some more right now. Remember, it's been one of the favorites of FIs for a very long time, but now 2 consistent quarters of disappointing performance has got the stock reeling under pressure. Merbun, what's your view?
I agree fully with you what you said. I think that the numbers, according to me, could provide a trigger for a correction in the stock price, and that is what the stock is right now showing. I think 125, 123, 127, as I mentioned before, is possibly a fresh entry point. Not very disappointing numbers, just the numbers which could possibly make the stock correct, because this has been a stock which has possibly given you a return of 150 to 200% over the last 3 years. This is the stock which many people bought, made good money, and there are a lot of people who are feeling left out. So, because it's a very well-managed bank otherwise, I think a 7-8% correction from the level of 135 where the stock was, which I was feeling, was a level where you can't put in too much of incremental money. So, this 5-7-8% correction where this numbers possibly could result into, could provide a fresh buying opportunity.
All right, let's move out of DCB then. The stock actually is now lower even